Welcome back to my Vanguard Portfolio Update series. It's already another month gone by very quickly in the stock market. Let's have a quick recap firstly on what's going on in the stock market and also how much money we were at in last month's update. If you have a look on screen now, we were around £44,139 on the pension and our ISA was at 11,943. And just before we jump into all of the numbers, let's just have a quick recap of all the goings on in the stock market because it's only been 4 weeks, but I feel like a load has happened already. If we have a look at the performance so far of the S&P 500, we can see that it's pretty much given up all of those amazing gains that it had through August, which is ironic now. It's gone from the best month performance for a long time to the NASDAQ having one of its worst ever days since the pandemic and one of its worst ever days on record. So you can see now the S&P 500 currently sat under 3,900 points and it was nearly above, or just a little bit above 4,300 just a month ago. So a huge amount has changed already in just a short space of time. What we thought maybe was just a quick bear market rally probably was at least one of those, and who knows where we're going to go from here. Now, unfortunately, everyone, the bad news, just a constant flow at the moment. And you may have seen just a couple of days ago that the US inflation data just came out and unfortunately came in a little worse than was expected. And what this does mean, unfortunately, is that all those interest rate rises that Jerome Powell's been making over at the Federal Reserve haven't been enough to tame inflation just yet. So it does worry the markets and of course sent everything into a bit of a free fall. Lots of major companies lost a huge amount of money. And as I just mentioned a minute ago, the NASDAQ has one of its worst days since the pandemic. Companies like Apple, companies like Meta, and all the big chip makers lost a huge amount of their market cap in just one single day. So a lot of the worry at the moment still, of course, remains to be inflation and how high interest rates are going to have to go to be able to combat that. Now, when interest rates are high, of course, big purchases and loans for consumers is going to go only in one direction and going to become more expensive. So if you're looking to remortgage or get a new loan out, that's going to cost you a lot more money. And then, of course, it's the same for businesses too, who are looking to grow and expand and, of course, reduce the cost of their capital. So it does hurt those smaller companies a lot worse than those larger ones who've got a lot of cash in the bank. Now, I don't want to be the doom and gloom merchant, but unfortunately that news seems to already have been delivered, no pun intended, by FedEx, who just came out today in breaking news as I'm actually filming this, saying that they've seen a massive downturn in the demand for their services and they're forecasting a lot worse for the few months ahead. That's actually caused their stock to completely plummet, scaring off the rest of the market too. Now, as you might expect, FedEx, a parcel courier, is going to be on the front line of that reduced demand from consumers. So if we're out there spending less and not buying as much online, for example, and they're going to see that straight away, that could be a very bad sign for the economy, those guys being on the front line. But hey, who knows where we're going. And finally, let's not forget that the pound has hit a multi-decade low today. So it's just a great time to be an investor and a great time to invest in the UK. Don't you think? Anyway, let's pull the plaster off now. We'll dive into the Vanguard account, have a little look at what the damage is and see how well we're doing. And hopefully it hasn't actually updated yet until it refreshes later on. Okay, firstly, let's have a look at the ISA. You can see not really much has happened. It's kind of fallen back there. It's £11,641. Now, if you're new here, you'll know that I pretty much just dumped in a lump sum money and haven't really added much to the portfolio since. And it's a really, really simple one too. Let me also just take a little bit of time in this update just to show you a bit more around the Vanguard interface. I realize that I'm diving very, very quickly. And if it's your first time, there are a few little sections and a few things which don't necessarily make 100% sense. So of course, when you're on your ISA page, you get a lot of the main things that you need to be looking at. Of course, how much your investments have actually gone up in the personal rate of return, as we can see here in the top right of the screen, which says how much money you've put in and how much you've been returned. But also in that performance tab, we have a little look inside here. I know one of you commented on this in a previous update. You can actually go back, of course, and see how your investments have done to give you that warm, fuzzy feeling or to make sure you're actually doing the right thing, if you like. And one of the probably the most powerful sections of the interface here is you can go down to see how you've done by month. Now, it probably looks quite complicated with all the numbers on screen, but all it's saying is for a month, so let's just take February as an example. We started off as all our investments worth £10,335. There was £1,000 put in this case. We lost £147 of value due to the market. And then, of course, there were £4 worth of fees. So we actually lost on that whole £151.40. And what that did is created an ending balance just for that month alone of 11,188, as you can see on screen. Now, the column which probably then maybe looks a little bit confusing is cumulative returns. And this is just a running total of how much you've either gained or lost in total throughout your entire investments. So of course you can see when I started this in August 2021, very, very small gains of very, very small amounts of money from a £500 investment. So you can see over that time how I've actually done since August 2021. And it has been higher, of course, and then it has been low, especially when we look in toward the summer, just a couple of months ago, back in June, when we were at a very bad space in the stock market. So that's one to look at. And then, of course, we can just jump over to the investments tab, which just tells you what you've actually got in your account at one time. Oh, and while you're here, don't forget, I do leave all of the links in the description below for all of the offers on different brokers and different investment apps that you can use. So feel free to use those links below. And also it does help support small channels like mine. So as you can see, my portfolio is very, very simple, and it's very, very simple also for the pension side. I pretty much invest everything into the S&P 500. It seems to be a favorite for most investors and pretty much the flagship index and the go-to of how the global market is doing. And then, of course, I have a small holding in the FTSE Emerging Markets ETF too. So I have two ETFs, and then you will see I do kind of unfortunately have a very small amount of cash here, £43 here. What I'll do is eventually, once we get some dividends into the account, is I will reinvest that into one of these ETFs. £43, unfortunately, isn't enough to buy one of these ETFs, and ETFs, at least on Vanguard's platform, do need to be bought in whole numbers. When I say whole numbers, I mean whole shares. And VUSA from memory is something like £65 or something like that. Don't quote me, but £43 isn't enough to buy that one. You can see the only thing in the red are the FTSE emerging markets at the moment. And unfortunately, emerging markets are doing pretty poorly. I did just see in the news as well, Terry Smith, the famous fund manager, is winding up his emerging markets fund, which a lot of investors are going to be quite disappointed with. Everyone's going to get their money back for that one, but unfortunately, it's performed very, very poorly. He reckons that they haven't got an edge in that market and things aren't looking too good. So very interesting times at the moment because of Terry Smith and his Fund Smith set of funds have been really, really popular for investors as an actively managed option for people based here in the UK. Right, now over to the pension. Total amount value is 42,994. This is a self-invested personal pension, which does mean I can't touch it at the moment until I'm 58, I believe, with the current rules. That might, of course, change. So really, it's all about trying to get this as big as possible. So when I retire and I've got many, many grey hairs and even more worse hairline than I do now, that I can actually retire happy. Anyway, let's have a look again from a performance standpoint. The month, again, is the same, as you can see what has actually happened. I put this in one lump sum as I collected all my different investments from previous workplace pensions. And you can see at one point, after I'd put the money in for just a month, I was down over £3,000. And now I'm back to just being in the positive by a very small amount of money, up 600. Of course, with investing, one of the things you learn very quickly, and the longer you've invested, is that you appreciate that things can go up and down very, very quickly. And the key thing is, at least in my opinion, is to just ignore these things and you kind of become a bit numb to it. I think the moment you start investing, of course, you're logging in every single day, seeing if things go up or down. But I think the longer you invest, the more times you get to experience ups and downs. Now, unfortunately, over the last couple of years, lots of people haven't actually experienced any down. So the kind of crash we're going through at the moment, or the correction we're going through at the moment, is lots of people's first experience of that. And it can fill you with a lot of fear, a lot of dread. And of course, all the news I just went through at the beginning means that the feeling inside you is like everything's going to go crazy and you should just sell everything. And of course, that's the exact opposite, really, of what you should do. Anyway, while I leave this one on screen now, let me just address some of the biggest elephants in the room, probably one of the most common questions that gets asked, and no doubt you're probably thinking of in your head right now. If you're a brand new investor, or maybe you've just made your first investment and you're trying to get your head around all of this, what's going on at the moment, at the end of the day, is this a good time to invest right now? And if anything, with everything going down and being at least not at all-time highs, if anything, it's a great time to invest. You've kind of got to flip your mentality around to being only want to invest when things are going up. And actually, the money is made here. And also another thing you'll like to see me comment down below to lots of people is saying the money you put in now, really, if you're going to be investing consistently month by month over the next 10, 20 plus years, it doesn't really matter. I mean, let's say you put in a couple of £100 now this month, even if the market crashed 50% and your money went down to £50 or something like that, you just put in another couple of £100, another £100 that next month. And in 10 years' time, you really won't be bothered about that £50 that you've lost or that £100 that you've lost in value. Nothing's ever really lost until you make that sale. So it's about playing that long game. It's about drip feeding into the market. So dollar cost averaging or pound cost averaging, whatever you want to call it. Now, another question, of course, that gets asked all the time is, do I lump sum or do I dollar cost average? Now, dollar cost average or pound cost average, whatever you want to call it, is technically lump sum investing if that's all you've got at the time to invest. Now, most of you in your entire lifetime investing are going to have multiple times and multiple opportunities to invest, unless all of a sudden your employer decided to pay you your 30 or 40 years worth of career up front. Hope that all makes sense, right? If anything, just do what works for you. If you had a lump sum sat to the side from an inheritance or a windfall from work, do what suits you. If it feels better to lump sum it all in at once, that's up to you. The stats say that that's the best thing to do, but of course it's about 65-35 whether it's the best thing to do or not. So, and that's just based on historically the fact that the market overall, at least the wider market, tends to go up more than it goes down. So that's all we've kind of got to go on. But the real important question is, it's just up to you and how it will make you feel. Some of us can be more robotic and be detached from our investments, and other people are going to get more emotional about it. And it really will come down to your personal preference. But hopefully by sharing these updates and showing you the ups and downs and the fact that really one month you can think you're on top of the world and another month you're going to get brought down to earth again, really for the long term that I'm going to be invested in, I don't really care. So I know I say that quite a lot as well. And it might seem weird that I don't care, but actually, if anything, I want prices to remain lower so I can get more money into the market. So try and have that mentality if you're brand new. It's easier said than done, and you'll probably need to go through a lot of pain to finally push through. But anyway, that is pretty much wraps up my portfolio update. Thank you so much for watching. If you do want to follow along with any of my other portfolio updates, don't forget to follow that playlist. And also, if you didn't see the video I just did recently, I did quite an interesting one that looked at whether you should invest in index funds or individual stocks and all the different balancing acts that you've got to look at, whether you want to invest in one or the other, or maybe both. Anyway, thanks so much for watching. Drop me a like on the way out and subscribe for many more. And as always, happy investing.